Hey everyone, this is Julian from the Binary Lab, and if you've been following me on Facebook at facebook.com/the Binary Lab page, or my personal profile, which is facebook.com/the Professional Bum, you would have found out that over the weekend I was actually at a trading seminar about behavioral finance. This was a special program conducted by XM in Bangkok, and I was there at the event looking to see what things I could refresh my mind with, because over time, like I mentioned in my previous video, it's very easy to forget some of the key concepts of trading, and or like even with regards to what kind of things to look out for and all that. And I thought it would be a great time to refresh, and at the same time to see what interesting concepts I could pick up as well that I could share with you guys over here. So when I attended that seminar, it was something created for all events, and I have some notes right here in my hands. There have been people in my Facebook that have been asking for me to, after they saw shots of these notes that I put out there, you can have a look. Well, basically, I'm gonna be people requesting that I can share these notes. So I thought an even better way would be for me to re-explain and reteach you some of the things that caught my eye. So once again, this is not actually everything, but this is just some of the stuff that caught my attention that I wish to share with you guys. And like it was a really well put together event. And as a matter of fact, if you wish to receive free money, literally free money, there's a link beneath this video where you can register your XM account. As soon as you verify your account, and so there'll be a typical ID, address, and receive a verification SMS on your cell phone, and you actually get to receive like $30 to give XM a test ride. How cool is that, right? So that's just one of the promotions that I fixed up with them at the event, and it's open to you guys, especially for those of you subscribing to the Binary Lab, just as a happy thank you for following me for so long. Okay, so the first things first, when you look at any kind of trade, there are three important elements, okay, and these are three M's. M, you need a method, okay, you need money management, and you need mind. So method is about the entry and the exit, okay. The speaker gave an example about a method that, let's say, he gave a very good analogy. Okay, it was like, if every morning I'm sitting in my window, I open the window, and there's the tree outside. On that tree, there are some birds. Okay, and there are white-colored birds, and there are also some black-colored birds. Probably magpies or crows or whatever. And if I see more black-colored birds than white-colored birds, I sell. If I see more white-colored birds than black-colored birds, I buy. So he asked everyone, does that make sense for a strategy? And then a lot of people said, no, that doesn't make sense at all. He said, what if I told you that if I took this method to generate buy and sell, and took a statistical analysis over 1,000 attempts, and found out that over 1,000 attempts, 200 times I'm profitable? Or how about if over 10,000 attempts, 2,000 times I'm profitable? So I'm 20% profitable with this method. With this method, would that be a good method to use? People said no. But here's the thing. Okay, if that was only accurate 20% of the time, or rather, if that was inaccurate 80% of the time, could we possibly take the trade the other way and make it 80% accurate and only 20% inaccurate? It's possible, right? Now, the second thing is, so the point he was trying to make is that when you're very clear about your method, and in my previous video I showed you about how to create your own trading method, some of the things to look into, right? So once you created a firm trading method, then you want to look into money management. Money management, what he shared with me is that money management is actually more important than the method, because if you know that how your trading method behaves, you can even use money management to turn a 40% accurate strategy without reversing the strategy into a profitable one. Is that an aha for you? Well, if it is, you go ahead and type aha in the comments, and I know that worked out for you. So, and on the other hand, if it's 80%, if it's 40%, if 20%, all these things with money management, I mean, like trade sizing, that can all be converted. Every method can be taken to be profitable the moment that you know how it behaves. And at the end, towards the end of this video, I'm going to be sharing with you some of this money management ideas on taking the trades as well that he gave, which I thought was really, really good. Now, the next thing is going to be proper mental management. So this aspect, I've done a lot of videos about the mindset, so you can actually check out my channel. Subscribe to this channel if you haven't already done so. There's a lot of information on that. Now, I actually put this next note inside a box because I thought it was really, really good. And what it says here is that every method has a time where it is synchronized with the market and when it is not. So a lot of people get stressed, and this reminds me of very recently as well, because there were, around the Brexit, right? I was desperately altering my trading method because it was just not getting results, only to find that 5 weeks later I reverted to the 2-minute reversal strategy, and it was doing well. And I actually have some students today making very, very good money using a two-bar reversal strategy, and they say they're using it throughout. So, having said that, I mean that's case in point that every method will have times where it goes out of sync with the market. It can be hours, it can be days, it can be weeks. Okay, and so you just need to be able to have the mindset to understand that when that happens, just don't trade. Okay, like for me, I went on to doing other R&D. I also went from live to demo, and likewise, so that when the right conditions return, go ahead and do it. Or let's say you can run a strategy tester, right? You can run a strategy tester, a simulation on a previous segment of time, and just to get just to simulate the trades to see that does the strategy still work out. You can use that to practice until when the proper conditions return, then you can trade it again. So that way you get used to seeing familiar setups. Now, signal versus setup, very important. I mentioned this one in my last video as well. Many traders will confuse the signal and the setup. The setup is what we are looking for. It can be market conditions, it can be indicator setups, it can be indicator confluences, a few of the oscillators saying the same thing. On the other hand, signal is a time to enter the trade. So a lot of people a lot of people lose money, and I admit I've lost money because of confusing signal and setup as well. For example, how many of us have actually bought some kind of a buy-sell indicator or downloaded some kind of a buy-sell indicator, and just when we see buy, we buy, and just when we see sell, we sell, only to find out that the indicator moves up and up and up and up and up, or down and down and down and down and down. It keeps basically repainting, right? In my recent binary lab training for my special group of people in the binary lab, I taught people how to lock indicator from repainting and how to find that, and that basically is the signal. Okay, so a signal locks in a setup. When I heard that at the event, I was like, why couldn't I have thought of expressing it that way? That is brilliant. A signal locks in a setup. Okay, so you may have a setup, but without the signal. What is the signal? A signal, like I said in the previous video, can be, if you're looking for a sell trade, right? You can look for a piercing line candlestick. Piercing line is where it's like about 50% of the previous bar. You have an engulfing bar. You can have an evening star. You can have a doji, alright? Or let's say if in some cases the buy sell arrow is given on a doji or a pin bar, I take the trade immediately because that is not just my setup and signal rolled into one. Okay, now let's look at this one. Yeah, new traders focus more on the signal, on the setup than the signal. Now, support and resistance. Okay, support and resistance is something that is used by not just indicator-based traders, because a lot of indicators are actually based upon support and resistance. But a lot of people who do price action-based trading also use support and resistance. And you guys need to understand that support and resistance is not a signal, but it is a setup where you can find a signal. Okay, it is not a signal, but it is a setup that you can find a signal. So think of it as, a setup like a ladder, and you're climbing up a ladder to go to a box. If you open the box and inside you find a signal, then you trade. If you do not find a signal, you do not trade. You go back down, you go to the next, you go to the next box, put your ladder up there, climb up there, see if the signal is there or not. Support resistance is a setup that helps you find the signal. Okay, so a lot of people, like I said, when they see the price hits support resistance, okay, sell. See the price hits resistance, sell. I don't actually do that. I like to, when I hit the support, I would wait for some kind of a confirmation. Let's say we close at the line, okay, then I may take the trade. We close past the line, I don't take the trade. Now, having said that, he also brought in something very funny. Some of you watching this video are from Malaysia, and you can probably identify this as well, because when he was previously speaking, the gentleman from XM, when he was speaking in Malaysia, he had a seminar just like yesterday where there's over 500 people attending, and then he said that when you're looking at the chart, especially for support resistance on time frames higher than 5 minutes are the most accurate. 5 minutes and beneath are not so accurate. Okay, and then someone in the crowd said, "Don't worry, we never ever move beyond 5 minutes. Don't worry, we never ever get to 5 minutes." That means that they're trading like 1 minute, and they're trading, with 10-second charts from elsewhere, I guess, because they just want to do all the 1 minute trades, right? Okay, so that's really funny. And then, okay, either you get the joke or you don't get the joke. But when he said that, I laughed because there was a point of time where I was like, damn it, I just want to click the button, trigger happy. A lot of people are so trigger happy, and that's why they don't do well at trading. Now, trending. How do we identify a trend? Okay, so a quote from Mr. Dow Jones, the guy behind Dow Jones itself. He said, a market is confirmed to be in an uptrend if two highs have been broken. Okay, a market is confirmed to be an uptrend if two highs have been broken. And when it is broken, it should be assumed that the uptrend is going to go forever. So, we should draw that out. Okay, check this out. Alright, look at this one. First high, second high, the break of the second high, and it goes and goes. Alright, so a lot of people, including myself, haven't had much success in trading trends. And that's why I'm a counter trend trader, and that's why, in fact, I went over to binary options, because in binary options I felt that it is a much better platform to trade reversals, pullbacks, and, well, counter trend basically. The reason why I didn't have much success in trading trends is because I didn't know this piece of information, which I feel is very, very valuable. Once again, this works on timeframes higher than M5, so M15 and beyond. We look at two peaks, right? Once again, uptrends are higher highs, higher lows. So higher highs, higher lows. But when two peaks are broken, a lot of time in the past, I see that it just breaks one peak, and I'm already in the trade. But I found out that we need to break two peaks, and then that's confirmed to be an uptrend. Similarly, for a downtrend, we need to beat two lows then it is in a downtrend. So we have like a zigzag, breaks that. What is the best entry point? The pullback of the third. That's the best entry for going up. Same thing, the pullback for the third going down. That's the best entry as well. Okay. Statistically, also found out that sideways is not necessarily a perfect sideways. Sometimes it can be perfect like this. Sometimes it can be like this. Okay, I talk about flagging a lot in the binary lab, and you guys know that as well. So sometimes you can like do a few zigs, stick to the bottom, do a few zigs and zags, stick to the top, come back to the bottom again. Also a range. Now, let me just clear my keyboard so screen doesn't go off. It can also be a narrowing sequence of highs and lows as well. And here's the thing, alright? This is the difference between Forex and binary, I guess. In Forex, during sideways range, Forex traders are supposed to do nothing. I mean like, and when I say Forex traders, I'm talking about more along the lines of position trading, not the scalpers. This doesn't really concern the scalpers really, but it concerns more those who trade like long trades. But binary, I mean sideways is great, is awesome. It's the favorite thing. And I suppose that's why I've had more success in binary, because I feel that and you can probably know this as well, that the market is more often caught in a range than it is in a trend, right? Of course, it's seasonal. There will be times of the year, like recent Brexit and all that, where it tends to be trending for a lot of the time. But for most of the time, the market is in a range, and that's when it's really, really good for binary. But for those of you who want to do Forex trading, okay, and like I said at the beginning of this video, you can actually get a free XM account with 30 USD in there for you to trade, to try out the platform by clicking the link beneath this video. And I think it's thebinarylab.net/XM30USD free, something like that. Go check out the link down below. Now, for those of you who are trading trends, the market is rotational. One trend, the end of one trend is the start of another one. So it's always something to look at. Oh, and yes, a lot of people, martingaling, right? So a lot of people have the tendency to feel that they need to get the money back on the same asset that they lost the money on. But the market is kind of like, it's got a memory, and a memory to screw you over in a sense. And the more you pursue, the more it pushes you away. So rather than to revenge trade, with a good money management plan, you don't actually need to revenge trade. Just look for a setup on something else. This applies to people who are trading trends that don't work out. Binary is a slightly different ballgame, but let's talk about in general for those people who trade trends. Now, Alex Elder, he said support and resistance is like when a tennis ball is left to bounce within the floor and the ceiling. So let's say it can do big bounces. Imagine you dropped it from super high and from a crane, right? And it came down and somehow it bounced into a window and then go. Yeah. So that's what support and resistance is like. And and he also talked about a 3 MAs method, where you can have the general MA being like a 55 period, as being a very popular trade setup for people in the financial institutions, 55 period. And then you can use 2 smaller time frame single digit MAs, or maybe a low 2 digit like a 5 and 12, or even a 7 and 7, or something like a 5 and 7 and 12, whatever. 2 different MAs that you can have, like so you see the 55 and then 2 smaller time frame MAs to help you identify when it is kind of retracing within the uptrend and when it actually changes from one trend to the next. Support resistance. It can come in different forms. Support resistance can come in the forms of tops and bottoms. Okay, tops and bottoms such as the previous paper that slid under my sofa. It can be reaction highs and reaction lows, such as your double top, triple tops, right? It can be round numbers, the 00s, 50s. And at the same time, it can also be trend lines, it can be levels, it can be trend channels, it can be moving averages. Support resistances are not a point or a level, they are zones which are not exact. So he mentioned that there is, so I asked the question as in so if S and R zones support zones, they're not points or levels, because a lot of time you have like all these support zones levels, right? So you're wondering when to take the trade. So they are not a point or a level, they're actually zones. They're not exact. Zones that typically, forex traders don't want to trade in. So I said, how do you, if it's a zone, then presumably when it breaks out of the zone, it's going to be resuming the trend, right? So I asked him that, and he says yes. Then I said, if that's the case, if you're saying it's not exact, it can go slightly outside the zone and come back in, because many a time we get that, right? So he confirmed the same as me, which is the 2-bar confirmation. All right, 2 closes outside, and then 2 close outside of the support zone, and you can look for a breakout trade to the upside or the downside. Now, at the same time, for more aggressive setup, he says you put a call entry, a buy stop just above the high of the bar that breaks out of the zone. So it could be a pin or something like that above the high, a few pips above the high, or if it's breaking out to the bottom, a few pips beneath the low of that, and then there's going to be a confirmation. When you're looking for confirmation, go for the 25th rule. So you want to look at a time frame that's about 25 times smaller. If you are on a 1 hour chart, you have no choice but to look at a 1 minute. Sorry, look at a 5 minute to find your entry. So on a 1 hour, look for a 5 minute to find your entry. If you are on a 4 hour, you want to go down like 25 times, and that will be about 15 minutes to find an entry, and so on. Let's see. Okay, trend lines. When you draw a trend line, when you get, just as with the previous, right? Just as with the previous, I said that the uptrend is basically confirmed when 2 highs have been broken. So for a trend line, if you have 2 points, it's a tentative trend. If you have 3 or more points, it is a validated trend. And likewise for the highs, if you're drawing a downtrend, if you have 2 points, it's a low. 3 or more points is a validated downtrend. However, with trend lines, it can be very subjective, because, as you guys know, as you know, I talked about my mini trend theory when I use for scalping, which is great for binary scalping, but in Forex, it doesn't work exactly the same way. Like, trends can always be part of something bigger. So it is, and at the same time, like, perceptively, this is a diagram that I drawn over there. So these 2 points, that could be an uptrend. If you draw it here to here, this one, that could be another one. You could draw it here to here as well, and then you could draw one going down. So to each his own. Some may say it's an uptrend, some is a downtrend. So the better solution is to use a linear regression. Okay, so for those of you who are in the binary lab, Binary Lab, once again, is a community of binary options trading in which I teach people how to trade binary options online. If you want to ask me about how to draw a linear regression line, it's actually inside the MT4, and I can show it to you. Just remind me on the next webinar, I'll show you how to do it. Okay, so a linear regression line is a high and low with one or two standard deviations, and then is calculated over X number of bars, and he recommends 75 bars. So when we have two closes outside, okay, the linear regression channel is meant to, the linear regression channel is basically like three regular lines. So if there's a best fit line for the whole price move in the middle, and then we have one parallel on the top, one parallel on the bottom, and that's the way to identify whether the general as an overview, whether it's trending down or trending up. And two closes outside linear regression bottom or linear regression top, that is the breakout to the other side. Now, what else? Ways to confirm a trend. CCI is one way. So using the CCI, the Community Channels Index. Once again, CCI goes with linear regression channel. Above 100, I used to use CCI as a reversal, but these guys use CCI as a continuation. So anytime the CCI goes above 100, it shows that there is momentum enough for an uptrend continuation. CCI beneath 100, there's a momentum for a downtrend continuation. Now, there also is a special indicator that helps you identify the trend momentum very well, and that would be something that is called the Ephemeris river. So Ephemeris despotis, Ephemeris river, it comes from the Ephemeris despotis guy who set up Tradepedia, and and this indicator is actually not available anywhere. I tried searching for it, and you can try searching for it too. If you find it, let me know. But I searched around and I found out that you actually have to pay $100 for it. The good news is that if you use the XM link that I put down beneath this video, you can actually get that for plus auto linear regression channel drawing tool, plus a dynamic support resistance tool, 3 powerful indicators for like as long as you deposit 500 USD and above. Okay, so and if you deposit like 100 USD, you can receive the auto linear regression channel tool. So you wouldn't have to use it. You wouldn't have to manually draw vertical lines. You can simply use vertical lines and the manual linear regression channel, but you can have the tool to do that for 100 deposit. So it's your money. Best part, XM is now regulated by ASIC, FSA, and SciSec as well. So, but for other people, the Ephemeris river is something like the Ikimoku cloud, not very different, kind of similar somewhat. There'll be the band. It's got a little bit of a LRC built into it, and a bit of some MA elements that illustrate like a wave effect, just like a simple sketch. So when there's a wave separation in between, this shows like the strength of a trend. If the wave is close to the line, it will show that the trend is weak. We're almost at the end of this video. Now, money management. Like I said, as promised, with good money management, you can even turn an inaccurate system into a good one. Now, as you know, for those of you in the binary lab, oh, surprise, surprise, this is how the newsreaders do it. The newsreaders, they wear fancy above the table, but beneath the table. Ta-da! Bermudas. So, alright, money management. In the binary lab, in my latest system, we have about 4 confirmations in total. If you get all 4 confirmations, you take 100% of the maximum permitted trade based on your account size. So let's say based on money management, they always talk about the 2% rule. So you take a 2% trade, if it's a Forex thing, then you take 2%. If it's a binary, 2%, the stop loss amount calculated as 2% of your account. Binary, 2% of your account. If we have only 3 out of 4 of the indicators confirming the trade, then you take 75% of the maximum trade. So instead of like 2%, you're taking 1.5%. And if there's only 2 out of 4 of the indicators trading, they are confirming the trade. Sometimes you find that in binary, there's some trade signals that look really good, and I actually take those on the webinar. So here's what he says. If you see 2 out of 4 of the indicators confirming, and you somewhat feel it's a good trade, you want to take it, you don't want to pass up, take 50% of the maximum trade. Alright? Oh yeah, this is last but not least. No, actually, this is the last. Yeah, so that is the the last part. Now there's another one. That's basically the last component now. This is the triple confirmation. Use a combination of oscillators and try to explore overlaying moving average over an oscillator. For example, you can use RSI at default 14 with a moving average overlay of 9 to find out this, where is the crossing point. Okay, you can use the IMI indicator, and with a period of 14, the MA of 9. You can use the SROC 14 MA of 9 overlay and find a common point where there's a MA cross, or after the MA has crossed at the point, and then that would be a nice trending confirmation for those of you doing a Forex trade. For those of you doing a binary, if you use this setup, the triple confirm of the RSI with MA9, IMI 14 MA9, SROC 14 MA9. If you wish to use that in binary, please be sure to take a long expiry trade and go in the direction of the trend. Okay, so for those of you who are around Asia, there's going to be another XM event, just like the one that I attended yesterday on the 4th of September. So once again, if you wish to attend that, do click on the link beneath this video. Just to mention, XM was the first MT4 broker that actually I encouraged Binary Lab to download, because they had MT4 for both PC and for Mac. Now a lot of brokers have them, but XM was basically one of the first ones to have a Mac friendly MetaTrader 4. So I'm using a Mac right now, and I trade MT4 on Mac, and XM was the first broker I used. So I was really thrilled to see when they had an event. So click on the link in the video description, and at the same time, for those of you who want to join my Binary Lab community to learn how to trade binary options, and where I actually use some of these principles as well, go ahead and sign up at the other link, not just the XM one, but the Binary Lab one as well. It's theBinaryLab.net/join-binary-lab. And if you find this video useful, please hit the like button and subscribe. I'll see you next time. Goodbye.